Am I audible? Am I audible? Yes. Can you just respond on that? Whether am I audible? Yes or no? YN, 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 YN. Am I audible? Yes. Upendra is confirming that I'm audible. Okay. Who is he? I'm audible to you. Very good. Very good. Audible. Very good. Who is he? Harish. Harish is also there. Okay. Yes. Audible. Fantastic. Fantastic. Very good, actually. Audible. Okay. We'll start off. We'll start off in some time. We'll start discussing. Can you see the Word file? You can see the Word file. Okay. Yes. Hit the button. Yes. Upendra can see the Word file. Okay. Okay. We can see the Word file. Okay. Uvizi, Upendra, all of you can see the Word file. Fantastic. Very good. Harish also can see. Okay. Good. Okay, my dear soldiers. So, very good afternoon to everybody. Good morning to everybody. Today, my dear soldiers, we are going to talk about the amendments which are applicable to the upcoming upcoming examination of May 23. This is what we are going to discuss. These amendments are highlighted in the RTP, and in RTP, they have highlighted these amendments. What are the varied amendments? Amendments, first of all, mainly related to corporate governance, amendments which are related to peer review, NBFC. These are the 3-4 areas where they have made a lot of changes and amendments. Plus, new type of questions which they have brought in May 23 RTP. May 23 RTP seems to be very interesting. So today and tomorrow, our objective will be to touch upon what are the changes highlighted and how the questions are different from otherwise actually here. So how they are different and what should be our preparation parameter. Okay, that is what we are going to discuss. I request you to, as I type, as I highlight certain things to you, you start typing, start copying actually here. So simultaneously make a summary note of it actually. Okay, with this, first of all, we talk about May 23 RTP. This May 23 RTP. This we are going to make summary. Okay, we are going to prepare a summary of May 23 RTP. So that is what we are going to do. Okay. The very first thing is that they have given the definition of small company which has undergone change. Okay. Small company which has undergone change, and as per section 2 subsection 85, this definition has to be incorporated for the upcoming examination. So, section 2 subsection 85, it highlights the definition of small company. What is a small company? Small company is what? It's not a public company. It's not a public company. Small company, my dear soldiers, it's not a public company, my dear soldiers. Here, the paid up share capital is not exceeding, it is not exceeding, paid up share capital is not exceeding 4 crores. And my dear soldiers, turnover is not exceeding 40 crores. So turnover is not exceeding 40 crores. That's the thing here. So paid up share capital is not exceeding 4 crores and turnover is not exceeding 40 crores. So earlier the limit was 2 crore and 20 crore. Now they have revised the limit from 2 crore to 4 crores and 20 crores turnover to 40 crores. So this is the definition of small company. When I say it's not a public company, so small company is a, what you can say, it's a private company. So small company falls under the purview of private company. That's the thing clear. So that is what you have to understand as far as the small company is concerned. That's the thing actually here. So whenever we talk about the small company, my dear soldiers, a small company is one which comes into picture. That's the thing here. So this is what it is actually here. So whenever we highlight small company, it has undergone, definition has undergone change. When I say it's not a public company, it's a type of a private company. And here the paid up share capital is not exceeding 4 crores. Turnover is not exceeding the 40 crores. That is what the meaning of a small company. That's the thing actually here. Okay, fine. Now, next change which we can see is in the definition of audit committee. Audit committee. Certain subtle changes have happened in the chapter of corporate governance. Subtle changes which has happened, and let us look into those subtle changes which is there actually here. So first of all, audit committee, they say there should be minimum audit committee. When we talk about composition, there are minimum 3 directors. There are minimum 3 directors. Now, this amendment of corporate governance was already there in November 22 RTP also. The same change they are carrying forward to May 23 RTP. Most of this question are showing an indication that it may be a potential MCQ question or an integrated question. Definitely. See, wherever you see numbers, see, the trick for MCQ is that the questions are more asked on the numbers. Okay. So they are more oriented towards the number. So when the numbers are there, you have to be very careful actually. Okay, what they will give you actually here. Okay. So, and the quality of integrated question, MCQ question have gone up rapidly. It has gone up, no doubt about it actually. So there's a rapid revamp in the quality of question. So first of all, audit committee composition is that there are minimum 3 directors in the audit committee. That is a thing actually here. And next one, what they say that at least what you can say 2/3. So that's the thing here. So at least what happens, my dear soldiers, at least what you can say 2/3 of the director, 2/3 of the director, my dear soldiers, they should be what you can say independent director. At least 2/3 should be independent director. This word at least was missing. This was not there earlier. Earlier it was said that okay, 2/3 of the directors should be independent directors. So this word independent, 2/3 independent director was there, but at least 2/3 means the minimum requirement is it's minimum that at least 2/3 of the directors stands to be the independent director. That's the thing actually here. Okay. Then, my dear soldiers, they are highlighting about a very important question, repeated question in corporate governance is mandatory review. So mandatory review by audit committee. This is a quite repeated question in the examination actually, which talks about mandatory review by the what you can say by the audit committee. What are the mandatory review to be done by the audit committee? Let us look into that actually here. So whenever we talk about the mandatory review by the audit committee, there are certain areas. See, for example, what you can say management discussion analysis they have to review. That's a mandatory review to be done by the audit committee. Okay. Then statement of related party transaction. That is also, it is compulsory to be reviewed by the audit committee. Many times they have asked the question, and now recently the questions are trending that way, that there was a argument between management and auditor, and auditor highlighted the issue that there were weakness in the internal control to audit committee. Audit committee said, this is not our area, you should not come to us. Like that, there were questions like this, and the answer is that audit committee is wrong, because when the management is not cooperating, not giving proper details, then it is the audit committee who has to resolve the issue. Okay. And then they say that what are the mandatory review done by the audit committee? So these are the mandatory review to be done by the audit committee. So mandatory review by the audit committee, as I highlighted, my dear soldiers, the management discussion analysis, statement of what you can say the related party transaction. So it highlights about what are the different statement of the related party transaction. Even that is also mandatory review. Then letter of internal control weakness. So you also have what you can say the letter of internal control weakness actually. So letter of internal control weakness are management representation letter. So letter of internal control weakness are what you can say management representation letter. Then you have internal auditors report. This is also a mandatory review, basically focusing on internal control weaknesses actually. So that's the thing here. So you have what you can say management discussion analysis, statement of related party transaction, letter of internal control weakness or management representation letters, and then the internal auditors report, which highlights about the what are the different internal control weaknesses actually here. So that is being highlighted by the internal auditors report. That's the thing actually here. Okay. Then my dear soldiers, also appointment of chief internal auditor. So appointment of chief internal auditor and their removal. So if removal is happening, that is also under the mandatory review. Then quarterly statement of deviation and annual statement of funds utilized, actually. So what are the quarterly statement of deviation and the annual statement of the funds utilized, raised by IPO, initial public offer, further public offer, like that. So how the funds are being utilized. See, when you're raising the funds from the market, you will tell in the prospectus that for what purpose these funds are required. So you're highlighting that why I require that fund. What is the reason I require that fund? You're highlighting that thing. Okay. So these are all what you can say mandatory review by the audit committee. See, audit committee will be like a subset to the board of directors. And so they have to look into that, okay, whether the board of directors, they basically focus on the accounting and audit aspect. They coordinate with stat auditor, they coordinate with the internal auditor, they adopt new accounting policy, they ensure that there is a compliance with the applicable financial reporting framework. All these things are the functioning of the audit committee. Now, what they have done in the recent amendment, what they said that mandatory review, you don't have to review mandatory review of statement of related party transactions. So they have just removed this. Has been completely being removed, my dear soldiers. This is one thing which will not come. This is an amendment which has happened. Okay. So instead of say 1, 2, 3, 4, 5, okay, 2, 3, 4, 5, 6 points. Now one point has been taken. That is statement of related party transaction will be outside the overview limit of the audit committee. Okay. So they have kept it outside. This is one thing actually here. Okay. Everybody is clear. Can I go ahead? Hit the button GH. Come on. Hit the button GH. It means that I can go ahead. Upendra says go ahead. Okay. So note it down that statement of related party transaction. Now you don't have to do the reporting as such. Okay. Then also what has happened is that we talk about the composition of board of directors. Now, this is another very important topic in corporate governance. What is the composition of the board of directors? Actually, so board of directors. So you have regulation 17 and 17A of SEBI LODR SEBI LODR, which talks about the composition of the board of directors, regulation 17 and 17A of the SEBI LODR. That's the thing here. Okay. So now what this composition highlights about, what does it highlight? Let us try to understand here. First of all, at least 50% should be non-executive director. First of all, they say there should be at least 50% non-executive director. That is the first condition they lay down. Okay. And if the chairman is non-executive director, then you require one third should be independent director. Okay. If the chairman is a non-executive director, then one third should be independent director. So if the chairman is not a non-executive director, or rather he is a executive director, then my dear soldiers, at least at least 50% should be independent director. That's the thing here. So it talks about the composition of the board of directors as per regulation 17A, okay, of SEBI LODR, listing obligation disclosure requirement. So at least 50% should be non-executive directors. If the chairman is a non-executive director, then at least one third should be an independent director. Okay. Then point number C, if the chairman is not a non-executive director, then for example, he's an executive director, then at least 50% should be independent director. And there should be one woman director. Is compulsory. So one woman director should be there. And if the chairman is a non-executive director plus is a promoter founder, then my dear soldiers, at least 50% should be what you can say independent director. So that's the thing here. So at least 50% should be the independent director. Okay. This is they talk about the composition of the board actually. So what should be the composition of the board? At least 50% should be non-executive director. Chairman is a non-executive director, then one third should be independent director. Chairman is not a non-executive director. If he is an executive director, then at least 50% should be independent director. And one woman director, and chairman is a non-executive director, then and also promoter founder, then at least 50% should be independent director. That's how they highlight about the thing. Then what they have done, my dear soldiers, they said that auditor, what he has to ensure, my dear soldiers, that suppose say the chairperson, so whatever the chairperson of the board of 500 listed company as per market capitalization. So auditor should ensure the chairperson of the board. This is a special criteria under 500 listed company as per the market capitalization, my dear soldiers. So the chairperson should be a non-executive director. No, he should be a non-executive director, and he should not be related. To what you can say, not be related to the MD or what you can say the CEO. Should not be related, or should not be a relative. Rather, you can say should not be relative to MD or CEO as per Companies Act. So as per Companies Act 2013, you should not fall in the definition of relative, spouse, father, mother, brother, sister, son, daughter, son's wife, daughter's husband, stepfather, stepmother, stepbrother, stepsister, stepson. Okay, stepdaughter is not there. So first of all, understand that he should be a non-executive director, plus he should not be a relative to MD, CEO as per the Companies Act. So Companies Act, he should not be a relative. That's the thing actually here. Okay, so this is the definition. So one question was that brother-in-law of the director is appointed as a what you can say, he is appointed as the chairperson of the board. Brother-in-law is not falling under the definition of relative, because sister husband is brother-in-law, so it will not come into picture. So now there's no violation as such. So easier relative. That too, they say under top 500 listed companies. It's not asking for all entire compliance. On the top 500 listed company, they want to highlight. That's the thing actually here. Okay. So now, then what they have done, my dear soldiers, is that now this further what they have done is that in this particular scenario actually here, so okay, not relative, but this provision is not applicable where company does not have promoter holding, a promoter holding. So there's no promoter holding. It is not applicable to them. Example, HDFC, example, ICICI Bank, example, L&T. These companies, they don't have any promoter holding. There's no promoter holding in this company. So this provision is not applicable where the company is, what you can say, they are not having any kind of, what you can say, the promoter holding. That's the thing actually here. What they have done is that they have done away with this provision. They say it's done away with the provision. That's the thing here. So they say, no, this provision, we can delete it. So they went on to delete this provision. And earlier it was mandatory. Now they made it as a recommendatory. Okay. So what they say is that company may. So they make it very clear that the company may have a chairperson separate from. So he may have a chairperson who is separate from MD and CEO. Okay. So he may have a chairperson, my dear soldiers, who is separate from the managing director and CEO. Plus, so what are the conditions? So condition is that he should be, again, non-executive director and not a relative to MD and, what you can say, CEO. So this shall, whatever the shall, my dear soldiers, was there, now it converted into may. Means may no problem actually here. So they have changed into, like, say, it's not a mandatory compliance. It's better if you comply. It's better, otherwise it's okay, leave it. So earlier they were not allowing. Now they say, no, remove this provision. That's the thing. You have to remove this provision. That's the thing actually here. Mainly what has happened is that several companies are there where decision making remains with chairperson. So chairperson, now if you put a restriction that, okay, relative, but sometimes what happens, there are family hold companies like, say, Asian Paints, Reliance Industries, Adani Groups, like that. So what happened for them, it becomes always a challenging in nature. That's the thing here. Okay. They say, let it, you may. So this may is a big change. Earlier it was must. You have to ensure that now they made it may. No, this is may. You can do may. Okay. That's the thing actually here. So this is the another important variation and change that has happened. Then, so corporate governance has definitely undergone substantial change, no doubt about it. Definitely they've gone. Now, another thing what they have added is that to the composition of board of directors, yes, a director, he can be member not more than 10 committees, and director cannot be heading more than 5 committees. So director is member not more than 10 committees, and director is heading not more than 5 committees, like that. So they have put a restriction. These restrictions were already there earlier. Then shareholders approval. Now this shareholders approval is the new point that they have added. Actually, this is a new amendment. They added that, okay, shareholders approval is required. It is required. It is compulsory. You need to obtain approval within 3 months. Within 3 months, my dear soldiers, at a general meeting, you need to obtain the approval of the shareholders. Approval is must, mandatory. It is required to be obtained within the 3 months at a general meeting. They made it very, very clear actually. Okay. So the approval is required within 3 months at the general meeting. And then suppose say shareholders have rejected, suppose say they have rejected the appointment, they rejected the appointment. So they say that no, we don't want this appointment, they rejected the appointment. Now, nomination remuneration committee, they should give reasons. They should give reasons that no, you don't have to reject. So they have to give reasons for reappointment. Plus, you require prior approval of shareholders. So you require a prior approval of the shareholders. So these two things are amendment changes. Okay, this were not there in the study mat earlier. Now they have brought it as a change. So this is where you should focus on. So first of all, they say that you're appointing a director, you require shareholders' approval. Then suppose say shareholders have rejected an appointment, which is given by nomination remuneration committee. The nomination remuneration committee, my dear soldiers, they should give reason why. Okay, you have rejected, my dear soldiers. Okay, fine, there is a rejection that has happened. So now they need to provide a reason, a strong reason should be there, and convincing actually. And prior approval of shareholders is required. Okay, Harish Kumar is asking a question. Go ahead, Harish. What is your doubt? Please go ahead.
Sir, good afternoon, sir.
Yeah, go ahead.
Sir, will this Word file be shared, sir?
You want it, I will mail you. I'll mail you. Tomorrow I'll mail you after the crash course is over.
Okay, sir. Please, sir. Please, I will be need, sir. Thank you, sir. Thank you.
You are writing down, no?
Yes, sir. I'm writing down, sir. Yes, sir. Yes, sir.
This Word file will be definitely shared.
Okay. Thank you, sir. Thanks a lot.
So, but please don't be callous. All of you should write down whatever I'm writing. I'm just giving you summary gist points actually here, and this definitely this is meant for you only. Yeah. So shareholder rejected the appointment. Now reasons for reappointment plus prior approval of the shareholders is required. So you require a prior approval, that is must, and the mandatory requirement. So these are the two important changes they have brought in the composition of the board of directors. Okay, fine. Then let me move forward. Then they have brought some changes in the definition of independent directors. So corporate governance, as I told you, thorough change they have done. And last time they have not raised much question. So this coming examination, definitely you may have some queries or question coming up. So important area. Coming up to the independent director. So independent director, what they have highlighted is that, okay, now who is a independent director? Independent direction actually here. So first of all, independent director is a non-executive director other than the nominee director, So he is a non-executive director. He is other than the nominee director. And independent director, they will receive remuneration. So they will receive remuneration. Remuneration will be received by them. So that too, what you can say, sitting fees, mainly sitting fees they will receive. That's the thing here. And they are people of integrity. Okay, integrity, expertise, and experience. That's the thing here. So a non-independent director is basically what you can say is a non-executive director. It is other than the is a non-executive director. That's the thing here. So, and it is other than the nominee director. He will be receiving remuneration. He will be a person of integrity, expertise, and experience. See, the very foundation of corporate governance depends upon independent director. You appoint independent director who are not having any conflict of interest, who are not interested in the affairs of the who are not interested in their personal growth. They will be definitely be interested in the affairs of the company, but their personal growth, they are not interested. They are not bothered about their growth actually. Okay, they are more interested into, okay, let us look into the affairs of the company. The affairs of the company, that's more important here. Okay, for them that is the thing. See, in a pharma company, what happened? They have to test some medicine on animals. The directors, some of the directors who are sitting there, they say that why should we take the permission of animal? Whether animal will go and complain to the ministry? They were all laughing. But independent director, he raised the objection that you have to follow a process. You can't just say that I will not take the permission. So sometimes what happens, no, the director, they want to do something. They want to run the company as a family business. But independent director will come and say, boss, what you're doing is wrong. Independent director will not participate in the affairs of the company, not participate in the operations of the company. He will not be interested in anything. He will just go and attend the board meeting, because board meeting are the place where the important decisions of the company are taken. What way the company should run, in what direction the company should run, and what critical decisions are taken. Now that decision should not result in direct or indirect benefit to the directors who are executive directors. In their interest, it should not be there. That's the thing here. Okay, so that is why the very foundation of corporate governance are the independent director. Now they give a negative definition of following cannot be independent director. So the following people cannot be appointed as a independent director. So they cannot be appointed as independent director. That's the thing here. So promoter of LHAS and their relative. Promoter of LHAS and their relative. LHAS means listed entity, holding company, associate company, subsidiary company. So they cannot act as a independent director. That's the thing. So promoter of LHAS and their relative. Then relative of directors in LHAS. So listed entity, holding company, associate company, subsidiary company. That's the full form of LHAS. So relative of directors. Then KMP and their relative. In LHAS. So you can't appoint these people as independent director. Employee or ex-employee. Employee or ex-employee in LHAS. So you can't appoint them as a independent director. That's the thing actually here. Okay. Then, my dear soldiers, where person or his relative holding 2%, they are holding 2% of paid up share capital, 2% of paid up share capital, or rupees 50 lakhs, So person or relative holding 2% of the paid up share capital, or rupees 50 lakhs, that's the thing here. So any person or relative who is holding 20% of the, what you can say, paid up share capital, or rupees 50 lakhs, my dear soldiers, in LHAS. That's the thing here. So that is the thing actually. So any person or relative holding 2% of paid up share capital, or rupees 50 lakhs in LHAS, that is another important requirement. That's the thing actually here. So holding 2% of paid up share capital, or rupees 50 lakhs in the LHAS. So my dear soldiers, what happens is that they also cannot hold the position of the independent director. That's the thing here. And then relative indebted to LHAS. Relative received guarantee. So relative received guarantee on debt to LHAS, debt from LHAS. So indebted to LHAS, debt and guarantee of relative. So relative received guarantee on debt received from the LHAS. Okay, listed entity, holding associate. That's the thing actually here. Okay. And my dear soldiers, what has happened is that where relative having material pecuniary relationships, material pecuniary relationships, material pecuniary relationships actually. So it is like say 2% of the total of turnover or gross receipt, 2% of total turnover or gross receipt of L has. That's the thing here. So if suppose say they have material pecuniary relationships, then it is 2% of turnover or gross receipt of the L has. That's the thing here. Then person who has not attained the age of 21 years, any person who has not attained the age of 21 years, then lessor, then lessee, lessor and lessee. So person not attained the age of 21 years, lessor and lessee, supplier and what you can say customer, supplier and customer. Okay, so you have supplier and customer. So lessor and lessee, supplier and customer, they cannot act as a independent director. Then where what you can say director slash CEO, director or CEO of an entity receiving 25% of donation, director or CEO of NPO, rather it is NPO, non-profit organization, receiving 25% of donation, from LHAS PD, LHAS, you know, listed entity, holding company, associate subsidiary. PD means promoter and director. LHAS PD. The director CEO of NPO receiving 25% of donations from LHAS PD. So what is LHAS PD, my dear soldiers? The listed entity, holding company, associate subsidiary, promoter and director. So they even those people are not eligible. Then, my dear soldiers, employee, partner, proprietor, employee, partner, proprietor. That's the thing here. So what happens, my dear soldiers, is that employee, partner, proprietor. Okay. So even these people, for that matter, my dear soldiers, that's the thing here. So any employee, proprietor, partner, that's the thing here. So that is another thing actually here. So any employee, partner, proprietor, that's the thing actually here. Okay. So even these people, for that matter, actually, that's the thing here. So employee, partner, and what you can say, and the proprietor, for that matter, proprietor. Okay. Of auditor of LHAS. Then cost auditor of LHAS, or company secretary of LHAS, lawyer, write down lawyer, or professional firm, at least write down 10% of receipt, 10% of receipt from LHAS. So even the statutory auditor, cost auditor, company secretary of LHAS, even these people also cannot act as a independent director. Employee themselves are removed. So these people also don't have any chance to act as a definitely to act as a independent director. So they don't fall in that particular category. That's the thing actually here. Okay. So employee, partner, proprietor, it is auditor of LHAS, cost auditor of LHAS, company secretary of LHAS, lawyer, professional firm, at least 10% of receipts from the LHAS. That's the thing actually. Okay. Clear? I hope you are clear, my dear soldiers. That's the thing here. So these people cannot act as an independent director. What is the additional change they have brought in? This additional change, what they have brought is this one. This person relative holding 2% of paid up share capital are 50% in LHAS, relative indebted to LHAS, and relative having material pecuniary relationship. So this is some new changes they have brought in. New changes are there. which was not there earlier. You can mark this 4 as a new additions in the list of who cannot act as independent director. Okay. So person relative holding 2% of paid up share capital are rupees 50 lakhs in LHAS. Relative indebted to LHAS. Relative received guarantee on debt from LHAS. Relative having material pecuniary relationship 2% of turnover gross asset of LHAS. Okay. Are you clear? Have you noted down? Are you clear? Can I go ahead? Can I go ahead? GH. Come on. Upendra says go ahead. Good. Others also I have understood. Alina says go ahead. Okay, fine. Upendra says go ahead. Alina says go ahead. Fantastic. Okay. Now let me move forward. Let me go to the next thing actually here. Then they also have added that independent director, suppose he has removed or resigned, my dear soldiers, so he should remove or resigned actually, then he should be appointed. He should be appointed within reasonable time. So he should be appointed within reasonable time. Now, not later than 3 months. 3 months of vacancy. 3 months of vacancy. So it should not be more than 3 months of the vacancy. Now, this is a new change they have added, that they have given a specific time, actually specific time, and they go that it should be appointed within the time period of what you can say 3 months. 3 months if is appointed, then definitely this will go. Okay. So this is all about what you can say the independent director. Okay, fine. Now, my dear soldiers, let me take up some questions for the discussion. So let me highlight that questions. Let us also touch down upon the question. Just a second, I'll be back. Can you all see the question? Everybody can see the question? Yes. Can you all see the question? Yes, Upendra can see the question. Okay. It is your May 23 question only, but May 23 RTP question only, but let me give you the perspective as to how it is flowing. Let us see the question. Okay. Good deposit. So that's the thing here. So Good Deposit Limited, an NBFC registered with RBI under 45 IA of RBI Act and listed on National Stock Exchange, appointed ABC Company Chartered Accountant as their statutory auditor for the financial year ending on 31st March 23. Mr. J, the audit partner of ABC and Company, extracted monthly net owned funds position from the books of Good Deposits Limited. ABC and Company was peer reviewed on last January 2019. Its peer review certificate is valid till Jan 22. ABC and company did not apply for peer review after Jan 22 till the date of what you can say acceptance of audit. Okay, so peer review, there is a substantial changes that has happened here. Okay, so and examiner has not left any time to address these changes in the question itself. Straight away is applied. When I come to that question related to peer review, I will tell you. Okay, so let us not speculate anything. Just I'm telling you that how fast is examiner amendment is also applying the amendment. Okay, that we should be aware. So integrated case scenario 1, according to me, is a beautiful question. A lot of effort has been put by the examiner to draft this question. That's the thing here. Okay, now he is given the position of net owned funds. How much should be the net owned funds of a NBFC? Come on, how much should be the net owned funds? Come on, how much net owned funds an NBFC should have? Upendra says 1.5 crore. No, wrong, Upendra. How much net owned? Net owned funds means paid up share capital plus what you can say the reserves and minus accumulated losses minus investment in subsidiary company. Puvisi, you're absolutely correct. The net owned funds should be 2 crores or more. That's the thing. So whatever net owned funds we are talking about, the net owned fund should be definitely 2 crores and above. That's the thing actually here. Alina, Puvisi, absolutely correct. It is 2 crore. Okay, that's a requirement. So his first time is addressing in a practical manner. Now, if you see April 22 to March 23, there are places where net owned funds has gone below 200 lakhs. It has gone below. Which is the month? Come on, just identify which is the month. It has gone down. This is the month it has gone down. Upendra says November and December. Other months it is 200 lakhs, above more than 200 lakhs. Okay, so this just you have to note down and keep it. Now, next one, let me move forward. The board of Good Deposits Limited consisted of 9 directors, of which 5 were non-executive, including a woman director. 2 were independent. Out of the above, the chairperson of the board was regular non-executive director, promoter of the company. The company was not out of the 1,000 top listed entities for the past 5 years. That's the thing actually here. That is a thing actually here. So now this is the thing actually here. So the board of Good Deposits Limited, it consisted of 9 directors, of which 5 were what you can say 5 were non-executive, including a woman director, and 2 were what you can say independent director actually. So now see what happens is that this is a listed company. Okay, and chairperson of the board is a regular non-executive director and is a promoter of the company. Okay, this point is there, and the company is not out of the 1,000 top listed in the 5 year. 1,000 top listed means what? The chairperson should be a non-executive director and he should not be relative to MD and chairperson. He may. Now the amendment has become what? Come on, he may. Okay, that's the thing. The company may appoint a chairperson who is a non-executive director and not a relative. Okay, that's the thing here. Now, during the year, Mr. J recommended to the board and the audit committee to have internal auditors. However, board, citing budget issues, rejected the audit partner's recommendation. They say that you don't have to appoint an internal auditor. Okay. Board, however, assured that they would consider next year to have an internal audit department within the company. They say that let us have an internal audit department within the company. Now, let us go to the question. Let us look into the question. Now, look at this. Mr. J reported under clause 3A3 of master direction, NBFC auditors report Reserve Bank direction that Good Deposit is not eligible to hold certificate of registration under 45 IA of RBI Act, as during the year net owned funds is below the minimum required limit. Management of the NBFC had a different opinion that certificate pertaining to net owned funds from the statutory auditor is required with reference to position of company as at the financial year end 31st March, not based on each month's position. Kindly guide Mr. J with respect to the requirement under the master direction. One side, my dear soldiers, the what the management of company is highlighting. See, what auditor is highlighting, that the net own funds they are not maintaining. Net own funds they are not maintaining, because net own funds in 2 months you highlighted, Upendra, November, December, it is below 200 lakhs. So since they are not maintaining the net own funds they are not at all maintaining, my dear soldiers, actually here. So, and it is below the criteria of 200 lakhs. Okay, it is falling under the criteria of 200 lakhs, and that is the thing actually here. So now this is what you need to highlight and understand, my dear soldiers. So they are given this actually. So, but management is telling that you should take only as on the balance sheet date. Balance sheet date only you have to take it here. Beautiful question. They have never asked question on this. It's very, very specific. Very specific he is telling actually here. Beautiful. I would categorize this question as an excellent question rather. Okay. Because it is not tested. Okay. And they have never gone that, okay, see, we generally say net own fund should be more than 2 crores. But is it every month or is it the balance sheet date is the question? Come on. You make a choice. Balance sheet date you will take, or every month you take. You put month means M, you put balance sheet date means you put B. Come on. Take a chance. No problem. We may be wrong. Upendra says balance sheet date you have to, Alina says monthly you have to take. Monthly we need to take. Okay, so I'm getting a difference of answer and opinion. Okay, let me see what is the correct answer here. So here you have to take the position of net owned funds as on the balance sheet date, not on monthly basis. Monthly basis is not required. Okay, now let us look into the option. Every NBFC shall submit certificate from its statutory auditor that it is eligible to hold certificate of registration under section 45 IA of RBI Act, and such certificate should be with reference to the position of the company as at the year end of the financial year ended 31st March. This is what we are telling, that company should maintain the net owned funds, and you have to see the position of net owned funds as at the balance sheet date. Let us see other option. So A is suiting our requirement, but let us see the other option and then let us decide. Point number B. Every NBFC shall submit certificate from statutory auditor that is eligible to hold certificate of registration under 45 IA of RBI Act, and such certificate should be with reference to the position of company as at the end of each month. B is ruled out. B cannot be. You have to see the year end. But let me see whether we are having more sharper answer. Every NBFC shall submit certificate from its statutory auditor that is eligible to hold certificate of registration under 45 IA of RBI Act. Such certificate should be with reference to the position of company throughout the financial year. Now, this is also not making any sense, because we have to see at the year end, at the balance sheet date. Next one, only NBFC microfinance institution, MFI means microfinance institution, shall submit certificate from its statutory auditor that it is eligible to hold certificate of registration under 45 IA of RBI Act, and such a certificate should be with reference to the position of the company throughout the financial year. Now, no, we don't see the position throughout the year. We see the balance sheet date. Now, with this, what is the correct option? You choose the correct option. Come on. All of you choose the correct option. Which is the correct option? Alina says A. Alina says A. Very good, Alina. Upendra says A. A is the right answer. Definitely A is the right answer. You got it. Okay. Good question they have given. Poobizi says A. Absolutely, Poobizi. You're right. Correct. Very good. Now let us go to the next question. Mr. J was the opinion that the composition of Board of Directors is not in compliance with Securities and Exchange Board of India. Kindly guide the management with respect to the provision which is not complied by the management specified in the Regulation 17 of SEBI LODR. Okay. They have given you 4 options. They say that no, they are not complied with SEBI LODR related to corporate governance. There is no proper compliance. So now let us look into this actually here. What is the thing? First option, where the regular non-executive chairperson, where a regular non-executive chairperson is a promoter of the listed entity or is related to any promoter or person occupying the management position at the level of Board of Directors or at one level below a Board of Directors, at least half of the Board of Directors of the listed entity should have independent director. Now, totally, how many directors were there in the question? Totally, how many directors were there? How many directors were there totally? 9. 9 were the directors. And out of that, at least what you can say 50% should be non-executive director. 50% should be non-executive director. Okay. So that is 5. And here what they say, my dear soldiers, now when you are appointing a director, actually, my dear soldiers, what is happening is that, so at least five should be non-executive directors. And who is the chairperson? Now, if you see the question, who is the chairperson? See, chairperson, if you see the question carefully, the promoter, Upendra says it's a promoter who is the chairperson. Correct. Upendra, you're absolutely correct for promoter. But let us see the wording here. If you see, the company consisted of 9 directors, out of which 5 are non-executive. Fantastic. Because at least 50% should be non-executive director. That's a condition here. There's a 1 woman director and 2 were independent. So now what happens is that the chairperson is also not an independent director. So 2. So here they are violating, because if the chairperson is a non-executive director but is a promoter founder, so if the chairperson is also a promoter founder, then my dear soldiers, 50% of the director should be independent director. So it means that they're telling that only 2 directors are independent director. Is it a violation? Come on, tell me. Point A, is it a violation? Point A, my dear soldiers, is it a violation? Yes or no? So Upendra says yes, Alina says yes. So it will be a violation. Even Puvisi also says it becomes as a violation, no doubt about it. Okay. So now with this, let me read the next question so that you have a better understanding, better perspective. Mr. J was of the opinion that composition of the company's board of director is not in compliance with the SEBI Regulation 2015. Kindly guide the management with respect to provision which is not complied by the management as per Regulation 17 of SEBI LODR regulation. First one, where regular non-executive chairperson is a promoter and is related to any other promoter occupying management position at the level of board of directors or 1 below, at least half of the board of directors of the listed entity shall consist of independent director. So here this is not complied. But A, let us keep the A option, because out of 9, only 2 directors are independent directors. So definitely it's a violation. Definitely it stands as a violation. Okay. Next one, B, where the chairperson of the board is a non-executive director. So chairperson of the board stands to be a non-executive director. At least 1/3 of the board of directors will comprise of what you can say independent director. And where the listed entity does not have a regular non-executive chairperson, then at least half of the board will comprise the independent director. That's the thing here. So now, my dear soldiers, here if you see, the chairperson is a what you can say non-executive. Chairperson is a non-executive director, actually. That's the thing. So chairperson is non-executive director, then 1/3 of the board shall comprise of the independent director. That's the thing here. So B seems to be satisfied actually here. C, board of directors shall have an optimum combination of executive, non-executive, at least one woman director, and not less than 50% of the board shall comprise of non-executive director. I think this condition is also satisfied. And D, where the chairperson of the board is a non-executive director, at least 1/4 of the board shall comprise of independent director, and where the listed entity does not have a regular non-executive chairperson, then at least 1/3 of the board shall comprise of the independent director. They don't have a regular non-executive chairperson actually. So at least 1/3 of the board of directors shall comprise of independent director. Now here in this case, only one thing which they have not specifically complied is A, which is quite revealing in nature. Why it is A? What is the reason it is A actually here? The reason here, my dear soldiers, if you go to the perspective question, they say that, okay, whether the management not complied with the thing here, because the chairperson is a promoter, founder is a non-executive director, then 50% should be independent director. So second point is specifically it is not complied. 2A is the answer. Okay. Upendra, very good. Others, did you understand? Okay. Did you understand? Hit the button. You. Definitely 50% are not independent director. Yes, Harish, Alina, absolutely. Let Pubisi have understood. Alina has understood. Now next one. Third question. At the time of accepting audit of Good Deposit Limited, the quality engagement partner objected that ABC and company did not have a peer review certificate. Hence, we cannot accept the statutory auditor of NBC. Mr. J was of the opinion that ABC and company were falling under the level 2 category. Hence, they are required to get themselves peer reviewed once in 4 years. Kindly guide Mr. J about the peer review requirement as per the peer review guidelines of 22. Now, this is an amendment which has come up, and this peer review, I will take it up later. That will be definitely be part of a discussion. But you look at the way peer review guideline has come up, and now these guidelines are further to strengthen the aspect of peer review. Mainly, these guidelines are meant for that purpose, actually. So mainly, I want to strengthen the purpose of my profession, and that is why these guidelines are there. Okay. So you have the peer review guidelines of 2022. Now, the peer review guidelines, what they highlight, my dear soldiers, is that, so, okay, fine, you're doing peer review, but they have put certain conditions actually here. They say level 1, will start for the year ending, 31st March 22. So level 1 entity, my dear soldiers, 31st March 22. Okay, 31st March 22. So where the firm is doing audit, So that's the thing, actually, my dear soldiers. So level 1, my dear soldiers, start for the year ending, my dear soldiers, 31st March 22. That's the thing. So firm is doing audit. That's the thing, actually. So now this is the point you need to highlight, my dear soldiers. So level 1, starting for the year ending 31st March 22. That's the thing here. So now here what happens, the firm doing audit of listed entity in India and outside they say abroad. So listed in India, my dear soldiers, and outside. That's the thing, actually here. So this is the thing. So if you're doing the audit, so they are starting from the year, not ending, it's beginning. 1st April 22. So level 1 start, my dear soldiers, year beginning 1st April 22. You have to start off, my dear soldiers, that these audit, basically, if you're doing audit of listed entity, then you need to require a peer review certificate. They are mandated. So what they have done is that they have given the peer review guideline. They have given the mandatory audit firms, mandatory peer review. They say you should undergo a mandatory peer review. There's no other choice. Mandatory peer review is required. Okay. Then, my dear soldiers, what they have done is that they have come to the level 2. Now, level 2, what they have done is that this is level 1. So mandatory peer review, as I was highlighting to you. So for level 2, what they have done is that, just a second. And for level 2, what they have done is that they have created other category, that they say that they want peer, mainly the intention of government is that, not intention of government, ICI. Rather, ICI is that let more and more audit firm come under the peer review. They want to, because they want to improve the quality of service of the audit firm. Quality only will now dictate the terms, actually. So are you improving the quality of service? The quality of service has to be improved. There's no doubt about it, actually. So that is the thing, actually. So now level 2, my dear soldiers. So first of all, level 1 is what? Start for the year beginning on 1st April 22. Firm is doing audit listed entity in India and abroad. Okay. Then start for the year beginning 1/4/23, my dear soldiers, where firm is doing audit of unlisted public company, and they are doing audit of unlisted public company where their turnover is what you can say at least equal to 1,000 crores. Borrowing, say 500 crores, and what you can say paid up share capital is also 500 crores. Paid up share capital is also 500 crores. So level 2 start for the year beginning on 1st April 23. Firm is doing audit for unlisted public company, turnover 1,000 crores, borrowing 500 crores, and what you can say paid up share capital, my dear soldiers, is what you can say 500 crore, and that's the thing actually here. So now, my dear soldiers, this is the thing here. So level 1, the level 1 is something different, and level 2, our firm is doing audit of listed entity in India and abroad. That's the thing here. So level 2, my firm is doing audit of unlisted public company. Turnover is 1,000 crores, borrowing 500 crores, and the paid up share capital, my dear soldiers, is also what you can say 500 crores, and that's the thing actually. Then you have level 3. Now, when I talk about the level 3, my dear soldiers, they start, and what is the type of audit these firms are doing. So it all depends upon what type of audits you're doing actually here. Okay. So, and here, one additional condition I forgot. They want to include many firms under peer review. They say that firm providing assurance services, where there are 5 partners, at least there are what you can say 5 partners. Even those firms also will come under the purview of the peer review. They say that suppose say if you're having what you can say 5 partners, that's the thing here, 5 partners, then you even also that also you need to come under the purview. So you're having a assurance services means audit. It's another name for audit. Okay. So you come under the peer review. So now, intention of institute, this is R, I should say, I should use the word R. Where partnership firm, where there are 5 partners, you will come under the peer review. You have to undergo peer review. They've mandated. It's mandatory. You need to undergo. That's it. No other choice. Then starting from the year beginning of 1st April 24, this is 24, firm doing audit of entity raising funds of more than 50 crores. So they are raising funds of more than what you can say 50 crores. So suppose say if you are raising the funds of more than 50 crores. So starting for the year beginning 1st April 24, firm is doing audit of the entity raising funds of more than what you can say 50 crores. So what happens is that the firm providing assurance services where you have 4 partners. So now here 4 partners are more. Here 5 partners are more. And here firm providing assurance services where there are 4 partners are more. 4 partners are more. So they will come under the level 3 peer review guidelines. Level 3 for them it is applicable. That's the thing actually here. And next one, my dear soldiers, next one. Level 4, my dear soldiers, level 4 start for the year beginning 1st April 25. Firm is doing audit of entity, my dear soldiers. No, this is not, no. Firm is doing audit of doing branch audit of bank. Suppose if they are doing the branch audit of bank. Our firm providing assurance services where there are 3 partners or more. For them, they will come under the mandatory peer review. This is a new amendment and given in the May 23 RTP, and immediately the examiner also has not left time and he has applied the amendment in the question. So once you understand this, then only you can solve the question. Okay, you understand this question. Okay, that's the thing here. So now look at this level 1, start the year beginning. Okay, so this is the question. So these are the criteria. Have you all noted down? Everybody has noted down. Hit the button. N. Come on. Please hit the button. N. Upendra has noted down. Come on. If you noted down, just hit the button. N. Actually, okay, you've noted down. Fantastic. Definitely printed thing will be there. But you noting down is like learning 10 times. You noting down makes a sense actually here. Okay. And once the examinations are converted into computer driven 100%, then there's no question of noting down. But now you note down. Okay, for better connect and understanding. With this, let us read the question. At the time of audit of Good Deposit Limited, quality, now this is the question, correct. At the time of accepting the audit of Good Deposit Limited, the quality engagement partner objected that ABC and company does not hold peer review certificate, hence cannot accept statutory audit of NBFC. Mr. J was of the opinion that ABC and company were falling under the level 2 category. They were falling under the level 2 category. And since they were falling under the level 2 category, hence they are required to get themselves peer reviewed once in 4 years. Once in 4 years. Kindly guide Mr. J with respect to the peer review requirements as per the peer review guidelines of 2022. So, what are the peer review requirements? What are the guidelines as per the peer review guidelines 2022? This is the requirement here. Now, first of all, let me see what type of entity is Good Deposit actually. So Good Deposit. Registered NBFC and it is listed on national stock. It's a listed entity. Listed entity means for 1422, definitely you require a peer review certificate. So it is falling under which level? Which level? Listed entity audit will fall under which level? Come on, level 1, 2, 3, 4. Just now we did. Alina says it's level 1. Upendra says it's L1. Very good, Upendra. Very good. Alina, Harish. Very good, actually. Very good, very good, very good. So, excellento. Amazing. Your examiner also. Lava. How to immediately apply the things. That's what you have to understand from the examiner. Now, I've given this note. Now, look at this. Which is the correct option? Let us make a choice. First option, every practice unit falling under the category of level 2 is required to get peer reviewed once in 4 years. ABC and company was last peer reviewed in Jan 19 and accordingly they need to get themselves peer reviewed by Jan 23. Next one, as per the peer review mandate, practice units which propose to undertake statutory audits of enterprise whose equity debts are listed in India abroad as defined in SEBI listing obligation and disclosure requirement regulation 2015. For these practice unit, there is a prerequisite to starting from 1st April 22 of having peer review certificate before undertaking the statutory audit assignment. This is looking as, come on, which option? Then it is not falling under level 2. Then this is every practice unit under category of level 2. Level 2 will not come. Practice unit are, last D is practice unit are required to wait for allotment of peer review by the board. Once the name of peer review is intimated, then practice unit can initiate the process of peer review. Upendra says B as the option. Alina Puvizi also says B as an option. Very good. B stands to be as an option. So definitely B is an option. Okay, that's the thing. Definitely that's a right answer as such actually. So B is the answer. Very good. It's B is the answer, and that's what you have to take up. Okay, good. B is the answer. Fantastic. Very good. Now, next one. They also made amendment and you also made a proper application. Very good. Now, look at the question. Mr. J wants to highlight the matter with respect to absence of internal audit function in his audit report under emphasis of matter paragraph. However, management was of the view that audit partner was not right. He was not right by disclosing the said matter in the audit report as it was an internal matter. An audit team was not had not identified any material evidence which could impact the opinion of the auditor. They were supposed to have internal audit department. They are not having internal audit department. That is a concern here. Okay. So what is the question here? Kindly guide Mr. J whether proposed reporting under emphasis of matter paragraph in the audit report is correct. in the audit report. So auditor is telling that I want to put in the emphasis of matter paragraph. Now, easy, correct is the question actually here. See, what is emphasis of matter paragraph? Emphasis of matter paragraph refers to matter presented and disclosed in the financial statement, which as per auditor's professional judgment is fundamental to the intended user understanding of the financial statement. It is fundamental. It refers to matter presented and disclosed in the financial statement. Presented and disclosed in the financial statement. Can you choose two options which are very close to your answer? Come on. Which is the two options which are very close to this answer? Come on, choose two options actually here. Two options you have to choose, which are very close to the answer. Two options you have to choose. Go ahead. So, they refer to matters presented and disclosed in the financial statement, which is important for user understanding of financial statement. Choose two options, no problem. Puvizi says A and C. Alina says A and C. Very good, A and C. A and C, A and C you're highlighting. Good, very good, A and C. Harish Kumar say A and C. Upendra says A and D. A and D will not come. D talks about emphasis of matter paragraph, including the auditor's report, refers to matter other than, see, D is giving definition of other matter paragraph. So D will not come, Upendra. D says that user understanding of audit, auditor's responsibility, auditor's report. D is ruled out because auditor's responsibility means it is going to other matter paragraph. So it is not an emphasis of matter paragraph. See, emphasis of matter paragraph, it refers to matters presented and disclosed in the financial statement, which as per auditor's judgment is significant in the intended user understanding of financial statement. Auditor's responsibility means it is other matter paragraph. So ruled out, totally ruled out. So now absolutely correct. Most of you are right. It is either A or C. It is either A or C. In that you have to make a choice. Now, see, whether I should report under emphasis of matter paragraph is the question. This matter should I report or not, you tell me. Is there any other audit report where we talk about internal audit department? Come on. Is there any other audit report? Come on. There is an audit report in company audit which talks about the internal audit. If you have read that audit report, come on, go ahead. Which audit report talks about that? Which audit report talks about that? Come on, go ahead, tell me. Which audit report talks about that? Make a guess, or if it is no idea, means hit the button NI. But make a guess, give a try, give a maximum try you give. Make a guess. Can you tell me in which audit report in company law, company audit, they talk about internal audit? They talk about internal audit, and it has undergone amendment last year only. Caro, very good, Caro. Caro 2020. Which part of Caro talks about internal audit? Which Caro talks about internal audit? No problem. Go and check. Go and find out. Which part it talks about the internal audit is my question. Which part is talking about the internal audit? Which part is talking about the internal audit? Go ahead. So which part is talking about the internal audit? Go ahead. Come on. Make a choice. Which part? Clause 14. Very good, Harish. Clause 14 of Caro 2020 talks about that. Now you answer. Out of A or C, which is the correct option? Now you answer. Upendra, your doubt is clear. Okay. Now out of A or C, which is the correct option, you choose and tell me. Upendra says C. Very good. Puvizi says C. Absolutely correct. Harish, absolutely correct. So Upendra, Puvizi, Harish, all of you are correct. C is the right answer. Fantastic. Very good. Let us move forward. Let us go to the next one. Fifth question. Kindly guide Mr. J regarding areas where he may need to report the absence of internal audit function in the company in the audit report. Which area he has to report? He has to give a report about the absence of the internal audit. Come on, which area he has to report? This again, we have discussed. Harish has given the answer. Just give me the option. Just give me the option. This will be a cakewalk now for everybody. Puvizi says C. C. Alina says C. Very good, Puvizi. Alina, very good. Upendra also says C. So, Puvizi, Alina, Upendra, absolutely correct. C is the right answer. Fantastic. Very good. Now, let me move forward. Let me take up the independent MCQ. D is a practicing chartered accountant from Mangalore. Okay. And he's a practicing chartered accountant in Mangalore. He has been practicing as a sole proprietor for past 2 decades. Mr. D's daughter, Miss S, is newly qualified chartered accountant who cleared final exam just 3 months ago. Immediately after qualifying, she also wanted to set up a sole proprietorship concern, practice on her own. So she can be a partner also and sole proprietor also. Nothing wrong with that. It is very much correct. After setting up the firm, she printed her own visiting card. So what she has done is that she has printed her own visiting card. She has printed, and that's the thing actually here. So she has printed her own visiting card. That's the thing actually. So own visiting card she has printed. Okay. So what it is, SN Company, Chartered Accountant, Proprietrix, Miss S, FCA, BCom, Office JJ Nagar, Mangalore, phone number they have given. In the view of above visiting card, Miss X will be held guilty of professional misconduct. If so, under which clause? Under which clause? Beautiful question, superb question to create confusion. Come on, make a choice. Make a choice, and you have to answer me why you made that choice actually here. Upendra says she can't affix FCA. Very good. What is the letter she should affix? ACA. She has to affix ACA. Okay. Now she is a ACA, but she is using FCA. Which clause under the ethics will talk about this? Go ahead. Please go ahead. Tell me. Which clause talks about this? Come on, tell me. Which clause deals with this? Tell me, my dear soldiers. Go ahead, give a try. Please give a try. Which clause talks about this? So she's a ACA. Actually, the letter ACA should come, but she's using FCA. That is where professional misconduct. So now choose the option out of A, B, C, D. Now you choose the option. Choose the option. Alina says clause 1, part 3 of her schedule. Very good. Where person will be guilty of misconduct if he's a ACA but is wrongly using FCA. Where a person is ACA, that is associate chartered accountant, now he's using the letter as fellow chartered accountant. It's a case of misconduct. That's the thing here. Okay. So this is the point, my dear soldiers, where he's a ACA and is using the thing actually. That's the thing here. Clause 1, part 3 of the first schedule. The C, S will be guilty of professional misconduct under part 3 of the second schedule. Part 3 of second schedule talks about civil or criminal offense actually. So C is the answer given by Alina. C, no, but Upendra gives the right thing. Upendra says that yes, Miss S will be guilty under clause 1 of part 3 of the first schedule, which is very specific, very, very specific actually here. Yes, Upendra has made a right choice actually here. It will not go to second schedule. It will go to the first schedule, clause 1, part 3 of the first schedule. Correct. Clause 1. So D is the right answer. Very good, Upendra. Puvizi, Alina. Fantastic. Right answer you have given. So D is the right answer because specifically it addresses where you are ACA, but you're wrongly using as a FCA under clause 1, part 3, and it is applicable to members in general. Now let me go to the next one. Messrs. Adi and Associates are statutory auditors of Prakash Limited for the financial year 2023. While conducting audit of CA Saurabh, engagement partner noticed the following. He noticed the following: payments to various government employees not supported by any document, notices received from various regulatory authorities, payments of various fines and penalties, heavy payments of legal counsel, unusual cash payments. Okay. CA Saurabh should consider above as an indicative of. So it's an indicative of what? It's indicative of what actually? So Upendra says B, doubt on non-compliance of law by Prakash Limited. Pubizi says B, absolutely. Because if you see, my dear soldiers, there is a notice received by the regulatory authority. You have paid fines and penalty. You have made heavy payments to legal counsel. You have made unusual cash payments. So this is a doubt on non-compliance to law by Prakash Limited. So there is a non-compliance of law by Prakash Limited, and that's the thing here. So non-compliance of law by Prakash Limited. So B is the right answer. B stands to be the right answer, and that's the thing actually here. So B is the answer. Okay, that's the thing here. Good, very good. So this was a direct question, in descriptive question. What are the indicators of non-compliance of law? SA 250, consideration of laws and regulation in the audit of financial statement. The same question they have given, but he has not quoted SA number. Had he quoted SA 250, immediately would have jumped to B, doubt on non-compliance of law by Prakash Limited. That's the thing here. Next question, question number 8. You have been given an assignment of audit of IT department of a PSU. Checklist was handed over to you, which contained many questions, such as actually, that's the thing, many questions. So that's the thing here. So a checklist was handed over to you, which contained many questions, such as like, are external offsite data backup maintained at a place outside premises? Are separate usernames and password assigned to individual users? Are periodical changes to password ensured? The type of audit being conducted is likely to be what type of audit it is. Now let us go negative. Let us take negative aspect. Is it a financial audit? Financial audit looks into numbers. Is it looking at numbers? Come on, tell me yes or no. Yes or no. YN. Is not looking at number. It cannot be financial audit. Then coming up to comprehensive audit. Now, comprehensive audit deals with what? Economy, efficiency, effectiveness of public sector undertaking. Okay. So it looks into all the three things: economy, efficiency, and effectiveness. Economy, efficiency, and effectiveness. So are you acquiring the resources in economical manner? Are you doing efficient utilization of resources, and the objective is achieved? So comprehensive audit also, it cannot be, because it is more into economy, efficiency, and effectiveness. That's the thing here. Harish, Pubizi, Alina, they support that. And proprietary audit is more on expenditure. It is more of expenditure related. Okay. Proprietary audit is that you should not spend more than an occasion demands. You should not spend in a manner which results in indirect benefit. You should not get into that. So now balance left is compliance audit. Have you complied with the laws, regulation, orders, rules? Have you complied? So compliance audit is the right answer. A stands to be the right answer, because have you complied the guidelines, regulations? So this may be more of a guideline. That's what it is actually. So compliance audit is the right answer. Okay. Can I go ahead? Okay. Fine. Upendra says go ahead. Alina says go ahead. Okay. Go ahead actually here. So fine. Fantastic. Very good actually. Just we'll take a small break of 5 minutes. And after 5 minutes, we'll start the discussion. Okay, so now we'll continue our discussion with other things actually. So now other things, my dear soldiers, is question number 9. Question number 9 is a repeated question from a previous mock test paper of September and October. So it's a more of a repeated question. Twice, thrice they have repeated this question. I think you should be able to crack it if you are doing relevant study, means you're solving the questions, then it is definitely making sense. Now look at this. Sudarshan and Company was one of the joint auditors of Trilok Insurance Company Limited. Mr. Mukesh, one of the engagement team members of joint auditor, was examining the expenses included in different account. While verifying the expenses incurred in relation to employees, Mr. Mukesh made a list of same as follows, which he was going to discuss with his senior. The payment of salaries to employees, 95 lakhs, employee remuneration and welfare benefit expenses. It is included in which account? It is included in the employee remuneration and welfare benefit account. Then reimbursement of premium in respect of employees health cover, 15 lakhs. It is included where? In employee remuneration and welfare benefit account. Training and non-training expenses incurred for employees, 28 lakhs. It is included in employee remuneration and welfare benefit expenses. Expenses incurred towards medical treatment of employees not having health cover, 12 lakhs. Employee remuneration and welfare benefit expenses. Incentive paid to employees of the company who have solicited the insurance policy, they are showing under commission account of 36 lakhs. Now, whether it can be said that Trilok Insurance Company Limited has properly accounted for expenses is the question in relation to the employees. In relation to the employees, that's the thing here. Now, which is the correct option? You choose the correct option. This is if you've done solved earlier question papers, definitely it's a repeated one and you can solve it actually. Otherwise also you can solve it. This last one, incentive paid to employees of company which was solicited, who have solicited insurance policies. Is it correct that I can show under commission account or should I show under employee remuneration? Variable component payable to an employee, should I show under commission account or should I show under employee benefit expense? What should I do? Plus, first you answer this question. Upendra is giving some option, but I'll keep that option aside. First you answer this question, that an incentive paid to employee, is it a salary? Is it a remuneration? Or it should be shown under commission only? What can be done? Can I equate an employee to a commission agent? Can I equate them? Is my question. So Upendra says shown under employee expenses only. Harish says that no, sir, you can't equate an employee. You can't do it. You cannot do the equating actually here. Alina says that under employee expenses actually, correct. You have to show under employee expenses. So now if I look at the option B, it says that incentive paid to employees should be included in employee remuneration, welfare benefit expenses. Okay. And if you see option D, incentive paid to employees should be included in the employee remuneration and welfare expenses. So B and D are gravitating with what we are discussing, because definitely incentive paid to employees who are acquiring insurance policy, it is not a commission. They are not agents. They are full-time employee. They are on my payroll. And once it is payroll, any requisite incentive paid, it will be treated under employee remuneration only and not otherwise. So that's the thing actually here. So now it is gravitating between B and D. And under B, see, reimbursement of premium in respect of employee health cover should be included in other accounts. It should not be included in other accounts. It is ruled out. Then D, it says that non-training expenses have to be shown separately. Correct. Non-training expenses, you have to make a separate disclosure. So D is the right option. You have to go for option number D. Okay. How many of you are reading this question for the first time? Come on, hit the button F. Come on, first time you're reading this question. Okay, Upendra, Alina, who is he reading the question for the first time? Harish is reading for the first time. So more and more practice is required actually. So anyway, I have a compilation of the previous examination questions actually, the latest one actually. I think you can use that actually here. Okay, that's the thing here. Upendra, were you able to circulate the question in the group? Upendra, did you get that questions, important questions? Were you able to circulate in the group? Yes, Upendra. Please do it, without miss, you do it actually. Others, I will share those important questions. Tomorrow I will share it actually here. Okay. So that is for you only. You have to use it. See, you have to solve, you have to practice it. Only once you practice it, it becomes easier one. Okay. Fine. Now, next question. Let us go to the next question. This is an interesting question, but yet challenging. Good question they have given. 10th one. Paris Bank had an NPA account of Messrs. Suparas. Paras Suparas. Okay. Showing recoverable amount of 35 lakhs in the book. It sold NPA for 37 lakhs. Please select as to which is the following option is correct for accounting. Okay. So which is the correct option for accounting? They are asking. Go ahead. Please go ahead. This is the correct option for accounting. So 2 lakhs they made profit on the sale of NPA. Where they should show this thing? Where they have to show? Where you have to show this? Go ahead. What is the option? What is the correct option? Please tell me. What is the correct option? First one, A, let the amount remain in Suparas account. Answer is no. That cannot be. Account has to be just closed. B, credit the excess 2 lakhs to profit on sale of asset. No, totally ruled out actually here. You can't do it actually. You can't do it. You can't see when you make a profit on one NPA, there may be losses under other NPA. So you can't do it. C, credit the excess of 2 lakhs to the provision for loss on sale of NPA. That is the thing you have to be doing it actually. Return 2 lakhs to the party purchasing the NPA. Where they will return. So option is C. C stands to be the right option. Actually, Upendra, you're absolutely correct. So because you have to credit 2 lakhs to the provision for loss on sale of NPA. This question is being asked in theory, descriptive question also. So please be careful. Please be careful. They may ask this question also. Okay, fine. Okay, so good. Now, let me discuss more amendments, more better actually. So let me discuss more amendment, more changes which has happened actually. So we'll just balance with question solving and amendment. That is what we'll be doing it. So now more amendments coming on your way related to corporate governance. Corporate governance, tremendous change they have brought in, but small and subtle changes here and there. That's the thing here. Now they talk about what you can say the Nomination and Remuneration Committee. Nomination and Remuneration Committee. So we have NRC. We call this as shortcut, my dear soldiers, NRC, Nomination Remuneration Committee. It indicates that recruiting a candidate is a job of Nomination Remuneration Committee like director, CEO, CFO. Top level appointments are done by Nomination and the Remuneration Committee. That's the thing here. So here what happens, at least there has to be 3 directors. At least there are, what you can say, there are 3 directors. Okay. And all these 3 directors are non-executive directors. When we talk about the composition, my dear soldiers, of Nomination Remuneration Committee, at least there has to be 3 directors. And all of them are what you can say non-executive director. They fall under the category of non-executive director. Then at least 2/3, what you can say, 2/3 of directors will be independent director. Okay. Now earlier what they were doing is that the company who has issued superiority rights shares, superiority right equity shares, for them, my dear soldiers, it was there actually that if a company is having issued superiority right equity shares, now they say that nothing doing, whether you are any company for that matter, you have to have 2/3 of the independent director. They say that now it's independent director. That's the thing here. So you have to appoint. Okay. That's the thing. So at least 2/3 of the directors should be independent in all types of listed entity. Earlier, it was only specific to company issuing superiority rights equity shares. Now it is for all the companies that you have to see. Okay. Now NRC evaluates. NRC evaluates what you can say: knowledge, skill, and experience. NRC, what it does, my dear soldiers, it evaluates knowledge, skill, and experience, my dear soldiers, of a person, and also what you can say, description of roles, and responsibilities. Description of roles and responsibilities. That's the thing here. They'll also ensure that there is a background check done. They also have to look into what you can say the background check of a person should be done. Is the thing. So nomination remuneration committee is a highly trending question for examination. It's an amendment and highly trending. So please be aware with this actually here. Okay. So they may ask you a question on this actually here. And also chairperson of a nomination remuneration committee should be independent director. So independent director should act as a chairperson of the nomination remuneration committee. Okay, that's the thing actually here. Now these are the pointers, my dear soldiers. So who can act as a chairperson? It's a what you can say, a independent director. Next topic, information to the shareholders. This they have done a tremendous leap. Earlier, what happens, the information was about the what you can say, the name of the director, what is his qualification, what is his expertise. Only that information was restricted, but now they have expanded the horizon actually here. What information, how information is sent to the shareholders of the company. That's the thing here. Okay, so first of all, my dear soldiers, you send the annual report. Send the annual report to shareholders. Send the annual report, my dear, to the shareholders. That's the thing actually here. So send the annual report. That's the thing actually here. So now in such case actually here, so this is the thing actually. So information to the shareholders, my dear soldiers. That's the thing here. So send the annual report, my dear soldiers, to the shareholders actually here. So you can send soft copy to shareholder who has given registered email ID. This is a very good thing. I mean, lot of saving of paper. Soft copy to shareholder who has registered email ID. Hard copy to shareholders. So hard copy to shareholders where no registered email ID. Soft copy to shareholders, and then hard copy to shareholders, no registered email ID. And hard copy to shareholders, my dear soldiers, if hard copy, if specific request, is done. So if a specific request is done, then you have to send the hard copy to the shareholders. That's the thing here. So if there stands to be a specific request done, so suppose they are doing some kind of specific request, then definitely a hard copy to the shareholder. That's if specific request is done. That's the thing here. Okay. So you have hard copy, you have soft copy. That's the thing here. So soft copy to the shareholders if registered email ID, hard copy, then hard copy to shareholder if specific request is done that I want only hard copy. That's the thing here. And 21 days before AGM, it has to be sent. So 24, this is everybody is aware. Then next one, my dear soldiers, the resume of director, expertise of director. This information should be there. Then qualification of director. Shareholders should know who are their boss, who are running the business actually, who are the people who are having a knowledge actually. That's the thing here. And what you can say, functional areas. What are the functional areas? That's the thing here. So this is the thing here. And name of other listed entity. Name of other listed entity where they are director. So resume of the director, expertise of the director, qualification of the director, functional areas, name of the other listed entity, my dear soldiers, where they are the, what you can say, the director. That's the thing here. So any name of other listed entity, that's the thing here. So this is what you have to understand, my dear soldiers. The resume, expertise, qualification, functional areas, and the name of, what you can say, the other listed entity, my dear soldiers, where they are the, what you can say, the directors. That's the thing actually. So these are the pointers you should note actually. That's the thing here. Okay. So resume, expertise, qualification, functional areas, and what you can say, the name of other listed entities where they are the, what you can say, the directors. That's the thing actually here. So this is what you have to understand as far as the directors are concerned. That's the thing actually here. Okay. So first, my dear soldiers, hard copy to the shareholders if specific request is done, and 21 days before the AGM, resume of director, expertise, qualification, functional areas, and name of the other listed entity where they are the directors. Okay. I hope you're clear. Everybody is clear. Come on, hit the button. C. Please hit the button. C. All of you are clear. Okay. Yes, Alina is clear. Harish is clear. Okay. So information to the shareholders that the content has gone up. It's gone up like anything. That's the beauty of it actually here. Okay. That is the thing actually. Then also you have to make a disclosure of related party, RPT, related party transaction. They have given a cutoff, that is 1,000 crores. 1,000 crores are 10% of turnover. 1,000 crore are 10% of turnover, whichever is less. So they've given a cutoff actually. You have to make a disclosure. If it is 1,000 crore or 10% of the turnover, whichever is less, that you have to make a disclosure. Plus all related party transaction, you require a omnibus approval from audit committee. You require an omnibus approval. Omnibus means in total, all transaction. You cannot take one transaction. Overall, all transaction you should make a aggregate approval from the audit committee. Okay, that's a new thing they have added. So here in case of information to shareholder, this is a new thing they have added. So a lot of existing topic are there, but they have made a change or amendment. So that you have to be very careful. This is also a change. That's the thing here. This is also change. Now I am getting a question. Let us look into the question. UBC says that, sir, one doubt regarding report on corporate governance. Within how many days from the end of the quarter shall they submit quarterly compliance report to stock exchange? 21 days, 21 days. It is now 21 days. Okay. You have to submit the quarterly compliance report 21 days from the end of the quarter. This, I think, Poop, is a good point you have made. So submission of quarterly compliance report on corporate governance within 21 days of end of quarter, 21 days of end of quarter. There should be a submission of quarterly compliance report on corporate governance within 21 days of the end of quarter. You need to make the submission. Then another thing which has undergone change is risk management committee. Risk management committee. Risk management committee. RMC. You call it as RMC, there is nothing but the risk management committee. Risk management committee, basically it is, they should have committee in top 1000 listed company. They should have risk management committee. That is the one thing. And then high value, so high value debt listed company, high value debt listed company. So it is applicable to what you can say high value debt listed company. That's a thing here. So this is the thing here. So it is a top 1000 listed company, and what you can say high value debt listed company also should have the risk management company. That's the thing here. So this is a requirement actually. So risk management committee, basically they will do is that they will have a risk management, my dear soldiers, policy, risk management policy. This risk management policy, what they will do, it will address the framework for internal and external risk. So internal and external risk. Framework for internal external risk, then financial, then operational, and then sectoral risk. That's the thing, the sectoral risk. So risk management policy is what come on framework for internal and external risk, financial, operational, and what you can say sectoral risk, and then cyber risk. Actually, that's the thing here. So various risks are covered actually here. So you have to talk about risk mitigation, it comes into picture. So what is a business continuity plan? Business continuity plan, how it will be, that's the thing here. And then risk management policy. So applicability wise, there is an amendment. Otherwise, there are no change. This high value debt listed company, this is one amendment that happened. And this is where you have to be focusing on. So not only top 1000 listed company, but even how high value debt listed company are also classified here. They are considered here. Okay, that's the thing here. Any doubts? All of you are clear? Everybody is clear? Yes. Hit the button. See. Okay. With this, my dear soldiers, I wind up today's session on the discussion on latest amendment in RTP May 23. I'll continue my discussion. Second level of discussion we'll have tomorrow. Thank you very much, soldiers. Thank you very much.